We now move on to problem number 10 of the revision test paper of the CA Foundation course for September 2025. This particular problem number 10, is from the topic not-for-profit organization. They have given us in this particular problem that Mr. Malik is starting his private practice on 1st of April 2024. And how is he starting this practice? By contributing 8 lakhs on his own, and he is also borrowing 12 lakhs on which he will have to pay an interest of 12% per annum, which needs to be noted. In addition to that, they have also given us the receipts and payment account for the year ended 31st March 2025. And below the receipts and payment account, they have mentioned that 1/3 of the motor car is for personal use. Therefore, when we are preparing the same, we will have to note what exactly is to be done for motor expenses. Same, they are saying that as far as salaries was concerned, 30,000 was for domestic purpose. Now, domestic purpose will be personal. Therefore, it will again be treated as a drawings. And then they say that the medicines that were purchased during the year, the stock of medicines remaining unutilized at the year end stands at 3,80,000. Now, it's important to note that the problem tells us that we are supposed to prepare the income expenditure account and the capital account. Normally in this problem, we prepare the income expenditure, the capital account and the balance sheet. Now, they have also mentioned one very important point in this problem. That is, we are supposed to ignore depreciation on the fixed assets. Now, when we start off with the problem, the own capital contributed, the receipts side, own capital contributed is 8 lakhs. So this 8 lakhs will come in the capital account by cash bank, 8 lakhs. Then he has taken a loan, which is shown on the receipt side. This will appear in the balance sheet liability side, but we have not been instructed to prepare that. But remember that it will be recorded on the liability side of the balance sheet. Prescription fees. This is the income. Therefore, it will come on the income side by prescription fees, 26,40,000. Then you are having visiting fees. Again, this is an income. By visiting fees, 10 lakhs. By lecture fees, again, this is an income, 96,000. Then we are having pension received. Now, pension received is a personal. Therefore, this pension receipt which is there will come in the capital account by cash bank, pension, 12 lakhs. It has got nothing to do with the business that he is doing. Medicines that are purchased, that will be an expenditure. And as I said, they had given us the stock of medicine of 3,80,000. So that will be reduced. Our consumption of medicines during that period is 6 lakhs. This 3,80,000, where would you put it? You would record it in the balance sheet, asset side. Then you are having surgical equipment. Again, this is an asset, balance sheet asset side. Now, no depreciation is to be charged because they have mentioned it so. Motor car is an asset, so balance sheet asset side. Motor car expenses. And they tell us that as far as motor car expenses are concerned, 1/3 is applicable for personal. So, of the total motor car expenses 4,80,000, 2/3 will be recorded as an expenditure of the business, and 1/3 which is there will be shown as a drawings in the capital account. Wages and salaries. This is again an expenditure, but they tell us that 30,000 out of this wages and salaries that was paid was for domestic use. Therefore, we will reduce this, and the expenditure for the business will be shown at 3,90,000, and this 30,000 which was there was for domestic purpose, personal, drawings, therefore capital debit. Then you are having rent of clinic. This will come on the expenditure side. General charges, debit expenditure side. Household expenses, personal, therefore it will come in the capital account, household expenses. Household furniture. Again, the business has bought household furniture. Again, personal. Therefore, drawings. It will come in the capital account, debit side. Expenses on daughter's marriage. Again, this is a personal expenditure incurred by the business. It will come in the capital account, debit side as a drawing. Then you're having interest on loan. Interest on loan, this will have to be paid. It's an expenditure because he has borrowed 12 lakhs and he will be paying interest at 12% per annum. So for the year, the interest works out to 1,44,000. Balance at bank, balance sheet asset side. Cash in hand, balance sheet asset side. We close income expenditure account. The net income, or what we call as surplus, stands at 18,46,000, which we get transferred to the capital account by net income, 18,46,000. We close the capital account and the balance of capital at the end of the period is 19,76,000.